mortgage rates just flipped for 2024. Did you hear? If you're a buyer or an investor, this might be the break that you've been waiting for, or at least the very beginning of it. But there is more to this story. What's driving the drop? And what could it mean for the housing market? Well, stick around because the opportunities here could be opening up. But did you hear about the Chase Diamond secret that real estate moguls use to impress their spouses and call the shots without lifting a finger or spending a dime? Visit nocostcapital.com for the details. All right, so let's break down today's news with mortgage rates. They have just dipped to the lowest we've seen in 2024. Actually, the lowest all the way back to February of 2023. And some buyers are even locking in rates just under 6%, which is a huge shift compared to last year's highs of over 7%. That 1% difference might seem small. It certainly sounds small, but it's massive when you factor in the long-term savings on a 30-year mortgage. I mean, let's talk numbers. On a $300,000 loan, just a 1% drop in rates can save you nearly $200 a month. Over time, that's a lot. It adds up. So what's causing this drop? Well, it's all about the bond market reacting to the possibility of the Federal Reserve cutting rates. The Fed hasn't officially cut rates yet, but the market is certainly anticipating it. And if you look at the CME Watch tool, it has it at a 100% certainty that rates will be cut on the 18th. So in other words, investors are comfortably betting on these lower rates, and mortgage lenders, they're following suit. Everybody's getting ready. This is why we're seeing mortgage spreads improving. The difference between the 10-year Treasury yield and mortgage rates has narrowed, dropping by 0.8% from last year's worst levels. But here's where things get even more interesting. Mortgage applications are starting to rise. In fact, we've had 9 positive weeks out of the last 14. It's not a full rebound yet. Home sales are still at historic lows, but this drop in rates is sparking new interest. Think of it as a dam that's starting to crack. Lower rates are the pressure release that could see more buyers flood to the market. But let's put this into perspective. I mean, imagine that you've been eyeing a property for months. You've been thinking about it. You've been dreaming about it. But the high mortgage rates have kept you on the sidelines. Well, now with rates dropping, that same property becomes more affordable overnight. It's like getting a sudden discount on something that you thought was out of reach. For real estate investors, this is really an opportunity. Lower borrowing costs mean better cash flow, whether you're looking to buy rental properties or if you're looking to flip homes. And with the market still in recovery mode, you can find properties at a discount compared to the inflated prices that we saw during the post-pandemic boom. In short, you're getting cheaper financing and possibly cheaper deals. That's a double win. But that little window won't be open for long. Once that dam does break and more buyers flood to the market, that means competition. That means demand. And we know what happens to the prices when demand rushes the market. Prices go up. And let's not forget inflation either. With inflation showing signs of cooling, the pressure on the Fed to keep rates high, that's fading away. This opens the door for even lower rates down the line, which is almost a certainty as well, with 2 to 3 more rate cuts projected in the next 4 to 6 months. And that will certainly fuel the real estate activity. So if you're a private investor, the window for locking in low rates might not stay open for long. In addition or in combination with the lower opportunities with regard to purchase price, that little window might not stay open for long. It's a bit like catching a wave. Get on it early and you'll ride it all the way to the shore. If you wait too long, you could miss it. The key takeaway here, whether you're a first-time home buyer or a seasoned investor, this dip in mortgage rates could be your ticket to better deals and higher profits. Keep your eyes on the market because the conditions are improving. The vines are ripening for better opportunities. It's certainly here right now, and they're likely only going to get better. You want to get in early before the competition rushes in and messes up the whole price thing. But at least you got the rates, at least you got cash flow. Thanks for watching. I'll see you next time. Take care.